Welcome to the Roy Morgan Weekly Update. The second week of the Albanese government brought the new government's first crisis, with the price of gas soaring in much of Australia. And the opposition began to take shape under the new Liberal leader Peter Dutton and the new National Party leader David Littleproud. Roy Morgan polling over the last week shows no change in the two-party preferred vote. We see Labor holding at 55% to the LNP at 45%. Opposition leader Peter Dutton named his shadow cabinet on the weekend, and there have been several changes. Key Morrison allies like Alex Hawke and Stuart Robert have been relegated to the backbench, and there are many new faces on the Liberal Party frontbench. In a nod to the coalition's clear problem with women, in the recent federal election, the party has now named 10 women in their shadow cabinet, and both deputy leaders are women. We have Susan Ley is now the new Liberal Party deputy leader, and Perrin Davey is the new National Party deputy leader. But for the new Albanese government, the latest government confidence rating, which increased by a massive 28.5 points immediately after the election, remember it went scooting up high, has fallen back but ever so slightly this week, down 3 points to 108.5. But that is still a really good number, way past the neutral. It's a very positive number. Now 43.5% of Australians say the country is going in the right direction, compared to 35% that say it's going in the wrong direction. A really big change, a very big positive change since prior to the election. But consumer confidence is what must be of greatest concern this week. And the ANZ Roy Morgan Consumer Confidence Rating fell 3.7 points, down to 87 points, way below the neutral figure. Now, if we look at this as a long-term trend for consumer confidence, we see that by declining to only 87 this week, consumer confidence has hit its lowest level since the early part of August 2020, during Victoria's second wave of COVID-19, when the indicator slipped to 86.5, pretty close. And if consumer confidence falls again next week, it's likely to fall to the lowest it's been since the early days of the pandemic in April 2020. So what we see really is that the new federal government, or the change in government, has had no apparent impact on the weekly consumer confidence measure. Although government confidence, whether people think the country's going in the right direction or the wrong direction, seems to have been very responsive to the election results, consumer confidence is much more closely aligned to economic considerations. And at the moment, that's particularly changes in interest rates, or concerns about changes in interest rates. And if we look at consumer confidence by people's housing status, it's a really strong story. The RBA meeting today will be watched most closely by mortgage holders, those Australians who actually own their own home with a mortgage that they're paying off. In late April, we'll all remember the ABS announced a higher than expected inflation figure for the 12 months to March, and since then, consumer confidence has plunged for these mortgage holders, down 16.7 points, or 16.5%, to only 84.7, a really low number. And even just in this last week, we've seen consumer confidence for this group has dropped 5.6 points, or 5.5%, a substantial drop. They're really worried. Consumer confidence for those who own their own home, that is, they own it outright, has also dropped. It's down by 12.8 points to 85.2, almost as low. And consumer confidence for this group is not concerned so much about the interest rates, but it's more about speculation that housing prices are set to fall over the next 1 to 2 years. So these figures mean different things for different groups of people in different situations. And of course, in contrast, those people who are renting, for them, consumer confidence has barely changed at all over the last 6 months, and in fact is up 0.7 points since late April to 90.4 now. So the big factor driving the Reserve Bank to increase interest rates is, of course, inflation. And the latest Roy Morgan data, where we're looking at consumers' expectations of inflation, which are probably as important, if not more important than real inflation, shows that inflation expectations for Australians over the past few weeks are up another 0.6% to 5.7%. Australians are expecting inflation of about 5.7 points over the next couple of years, or 5.7 points each year over the next couple of years. So inflation expectations at that rate are now approaching the recent peak of 6.4%. That occurred in late March when petrol was so expensive, and the then Treasurer, Josh Frydenberg, slashed petrol prices by slashing the petrol excise by nearly 25 cents per litre. So as the chart shows, inflation expectations bottomed out in late 2020 during Victoria's second wave of COVID-19. And since then, inflation expectations have rapidly and consistently increased. Looking now at interest rates, the long-term trend for interest rates shows we still are enjoying really low levels of interest rates from the beginning of COVID-19 pandemic in early 2020 until now. So although we're concerned about increases, overall we're at a really low rate. And although interest rates are set to increase further over the next few months, the forecasts of most economists are that that increase will be kind of 2% to 2.5%. And that will bring the official interest rates into what they were in about 2015 to 2016. But I guess the really important thing is an increase of 2.5% if you're paying 4% on your mortgage or 5% on your mortgage is a big chunk of extra interest just in terms of the quantum. So this is what has people really worried. It's important to note also that these rising interest rates aren't just an issue for Australian people or Australian consumers. They're also an issue for Australian business. And businesses will be facing rising cost of doing business, as we see now with the soaring gas prices for many manufacturing and other businesses. So after the Reserve Bank increased interest rates for the first time in over a decade in early May, the Roy Morgan Business Confidence Rating plunged by 12.8 points, almost 13 points down, back to a neutral result of 100.2. So businesses had remained relatively confident until that big drop in interest rates. And as the likelihood is that the Reserve Bank has several more interest rate increases to come, there's likely to be increased downward pressure on this index over the next few months. So we can expect business confidence to decrease over the next couple of months. And so for the Albanese government, there's probably no more urgent priority than finding a way to put downward pressure on the prices of energy like gas and petrol in the months ahead. Thank you for listening. I look forward to joining you again next week when we'll have the latest unemployment data. Really important to keep an eye on unemployment from May. And we'll have that to share with you. Thank you.